let's touch base with the Executive Secretary of the Chamber of Corporate Trustees, Mr. Thomas Kwesi Esso, who hopefully can explain to us what is behind their decision to participate now in the domestic debt exchange program. Mr. Esso, it's a pleasure to have you. Good morning.
Good morning, Mr. Kudiyansin and then Woolston. It's a pleasure to be on your show also. Thank you very much.
So what changed?
Well, Mr. Youngson, I believe that you followed the conversation all this while from December. And then when we issued our press statement, we were categorically in the fact that the terms that have been proposed does not meet the industry's expectations or the workers' expectations. So we rejected it. And I think since then we all have not gone to sleep, even though we knew organized labor were able to have an exemptions for all the industry. But there was also a caveat that government, organized labor, and other associations will work together to arrive at a position that benefits all of us. So we continue to engage, even when the DDEP, the first DDEP ended. We've continued to engage government since then up to now, and we've all arrived at a situation that we think is beneficial to all of us. Honestly, we didn't go to sleep. We put a technical team together, a transaction advisor, a legal person. We put all those teams together to advise both from the legal point of view and then also from the financial point of view. And so we believe that where we've gotten to now is acceptable to the pensions industry, and especially when we set out our objective that we don't want the patrimonial value of the bonds to be lost. We also wanted to ensure that the bonds are also tradable, because as I continue explaining, if you leave the old bond in its state, there was no way it's going to trade on the Ghana fixed income market, because people will be looking for the new bond, because the old bond would have lost the value and it would have been a lot of risk attached to it. So it was imperative that since we are also in the industry, we seek the interest of everybody, all the workers who contribute to pension funds. We need to seek their interest also. And therefore, we wanted to ensure the bond was tradable, which have been achieved through the introduction of this new alternative offer. We also wanted to ensure that liquidity will be available to us, the industry also. So we have to extract assurances from government or the Ministry of Finance that when coupons are due and maturities are due, they were going to pay. And so since we are satisfied with the conversations, the financial aspect, and the assurances that government have given to us, I think it's just the right thing to do is to greenlight our pension fund schemes to consider accepting the alternative offer as been presented. Mr. Youngson.
Now, Mr. Esso, you talked about, liquidity. You've been giving assurances. I'm sure you've talked about since, December. And you also would note that since December, it's taking a lot of picketing to even get the finance ministry to pay some of the coupons that were due. How sure are you that this is achievable?
Thank you very much. That is why both parties have not reached to a conclusion on this deal. Labor was also very much involved in the organized labor was also very much involved in this discussion all this while. Let me say to you that after the end of the initial DDEP, we put our technical people at the disposal of the Ministry of Finance to ensure that our interests are properly protected since February. So it tells you that we've been working on this deal for a very long time up to now, until the Good Friday when a gist of it was given to us. And so, yes, labor has been involved. We have also been involved. And before we agree, we have to extract the assurances. Yes, like you said, there is always sensitivity to things like promises and then trust issues that I understand. But if you read the statement from labor also carefully, then it means that we are all holding government to its assurances that liquidity will be made available. In any case, it is also in the interest of government and all of us, because if workers go on retirement and they want to withdraw their benefits and then there is no liquidity, I think that it goes back to affect all of us, including government, including we, the corporate trustees, and then the investment landscape also, because then there is issue of confidentiality in the investment landscape. So, as of now, let me say that we do not have any doubt that government will renege on its promise. We still hope that, yes, when the times come for coupons to be paid and maturities to be paid, government will keep to the promise, that the assurances that they have given to us.
So, Mr. Esso, you're working on our behalf, right? You're working because these funds are our funds. Now, this is
Yes.
it. This is it.
Yes.
What is it that government told you that convinced you that government will not renege on its promises?
Well, Mr. Youngson.
Winston here. Go ahead.
Oh, Winston. Yes. Oh, Winston. Of course, when it comes to promises, I think very soon the first coupons of all the bonds under DDEP will be due. I mean, this month, we are expecting the first tranche of the coupons to be paid. And I think that this is a litmus test for government itself, that this month, including everybody who did their things under the old DDEP, and even including the pension funds, we are all waiting to see that government keeps its promise. So the month that we are in now will set the tone for all of us to know whether government can keep its promise. But at this stage that we are, since we are satisfied with the conversations that have gone on, we are hoping. I mean, we know. I don't have any doubt, Mr. Winston. I don't have any doubt until otherwise. Then we'll see that then the assurances given to us by government have not come true. But as I sit here, I believe that I don't have any doubts, and I believe that government will also not renege on its promise. And then this month in August, that the month that we are on in now, will be the first tranche of the coupons that will be expected under the DDEP bonds. And so we are hoping, and I believe that government is going to make deal with his promise.
Now, when you say you are hoping that government is going to make its promise, I get the impression that you don't trust the process fully. Are you telling me that your decision to exchange is based on government's ability to pay first coupon rates in August?
Our coupons are going to, the term of maturity of the coupons is up to 2027 and 2028.
Yes.
And before we get to the 2027 and 2028, there will be semi-annual payment of coupons.
Yes.
For all of us. And it is not only based on the coupons to be paid this month. What I said is that this month will be a litmus test for us to all engage whether government is going to keep its promise. But from the discussions that we've had, and then the assurances that we've had from government, like I said, I believe government is going to make deal with its promises, and then we'll be receiving the coupons semi-annually, and then we'll be receiving the maturities when they are due. But what I'm saying is that you are asking me what the government tells me, and I'm saying that, well, this month, August, is a month that will be a test for governments and all of us to see whether the assurances that he has given to us is going to keep it. So, in any case, in my mind and in the minds of all of us that were at the discussion, including organized labor, we do not think that government will renege on these assurances.
So, Mr. Esso, I guess that's what we are trying to get to the crux of. You and Labour have made these decisions on our behalf. We were not in the meeting. That's why it's important for you to help us understand what was said to you at the meeting that made you move from a group that was picketing because you did not believe that this government would live up to its word, to a group that now completely believes that government will live up to its word. What did they say to you?
Let me correct that. We never picketed at the Ministry of Finance or at any government institution. Don't confuse the individual bondholders or the pensioners with the Chamber of Corporate Trustees. We never picketed. We decided to use the route of dialogue, which we've done since up to now. And a lot of conversations have gone on. with Labour. A lot of conversations have gone on with the technical team also. So when it comes to assurances, I mean, like you can see in the DDEP, in the exchange memorandum also, government will pay us the first coupons this month. I mean, we've had those assurances that the coupons will be paid. So if you extract an assurance from somebody, it is backed by documentation, and the documentation is the exchange memorandum that is before all of us that we are reading. And therefore, like I am saying on behalf of the industry, and then on behalf of you, the worker, what I'm saying is that until government have done otherwise, then I cannot say that government have not kept its promise. But as I sit here, as all of us, as practitioners in the industry, those of us who are part of the conversation, and you workers, I can also give you the assurance that government have assured us that they will not renege on the assurances that they have given to us. So until something otherwise happens, then we see what will be the next actions that we will take.
Might it not have been more prudent to wait for these coupons to be paid before you then make a decision whether or not government is trustworthy enough?
Well, the point is that if you've not signed on to the alternative offer, then you will not be due for any coupon. Until you've had the agreement completed, then you can expect government to also fulfill its part of the bargain. And so that is why the 18 memorandum is out. That is why we have the period to consider and sign on to it. And so until we've signed on to it, then government cannot. That is why, I mean, if you are aware, the coupons for the old bonds have been outstanding up to now, which per the 18 memorandum all will be capitalized also into the new bonds. Yeah, so now, since if we sign on to it before we can expect the first coupon payment. So we couldn't wait for any coupon to be paid. I mean, that coupon will be paid based on what agreement?
Mr. So maybe
so
you could have
sign on to it.
Mr. So maybe you could have waited for the settlement in February. So you wait for that coupon to be paid. Then at least you know that government is paying. Not when you sign on to it, but at least just wait for government to make its first.
And so the old coupons, as part of the discussions, we all agree that the old coupons will be capitalized into the new one. And so we are not expecting the old coupons to be paid. I mean, the old coupons on the old bonds to be paid, because that will be capitalized into the new bonds. And so until the new bonds, until we've signed onto the new bonds, and then we are due for the first coupons, and government pays the first coupon, then you all know that government have kept the assurances.
Yes,
then we can expect the next coupon also.
Mr. Esso, I mean, you then would have signed on. My point is that maybe you could have waited for those who have already exchanged earlier in February. Wait for what happens. Then based on that, you would be better informed to then make a decision as to whether or not you can trust the words of government. I'm sure you would agree with that.
Okay, so that could be another strategy also. But for how long will we continue to keep the uncertainty going? Because that uncertainty must end somewhere so that you also have certain confidence in the financial system. Then we also, those who are practitioners and who are watching over your pension contributions, can also have some confidence in the financial system. And I'm sure that uncertainty, because what kills financial markets is uncertainty. And the more the uncertainty rages on, the more confidence in the financial market will also decline. So there's a point that we all need to end a certain level of end the uncertainty in a certain way, so that we can create the confidence and then hope that the assurances that we have all extracted will also be fulfilled. So yes, that could be another strategy. But the question is that for how long will you keep the financial market uncertain about what is going to happen with financial instruments? We need to end it at a certain point in time.
31 billion Ghana cedis is not uncertain. If the government decided to exempt it totally, it would be certainty of the market.
Come again?
31 billion Ghana cedis is not an uncertain amount. If government decides that it's going to exempt it totally, that would make it a certain market, and people would still do business with that market.
Very well. That is also another option that we could all consider. But the question I can ask you is that if there are two bonds one that have a sanctity of coupon payments, which is the new bond and the DDEP, and one that have an uncertainty surrounding its coupon payment, that is the old bond if you have not exchanged, and you are a market trader, which one will you go for? So that is why it was necessary for us that even as we discuss the new bond, we need to also look at the objective of tradability. Because if you are not very careful and you keep on with the old bond and it loses its tradability, then it becomes a junk. Then you are waiting for maturity. And what is the sanctity that even at maturity, if your coupons are not being paid, what is the sanctity that at maturity your coupons will be paid? So that becomes another issue that you need to deal with. But if you have had the discussions and then you exchange this for the new bonds, and then there is sanctity that the new bonds will be tradable, which goes to enrich the market and which also makes liquidity on the secondary market also available to you as a practitioner, the corporate trustees, then which one will you choose? So there are always parameters for some of these decisions, and that is why it has not been easy arriving at this position. Because since February, we've been having this discussion, all this while up to here before we arrive here. So a lot of factors have been taken into consideration. A lot of options have also been considered. And at this time, we think that this will be the best option for the industry. This will be the best option for the financial market. And this also ensures that when you go on retirement and you are looking for your benefit, you want to withdraw your benefit, there will be liquidity available to also pay your benefit for you.
Yes, but Mr. Esso, talking about tradability, lots of factors would influence tradability. I mean, just having new bonds doesn't in itself means that people would want to, trade in those bonds. You know, for instance, that today, based on what has happened, lots of people may shy away from government bonds, isn't it?
That is the reason why it is very imperative on the side of government that its own assurances, its own statements in all the exchange memorandums, in the exchange memoranda are all fulfilled when the time comes. Because now the market players the buyers have given their side, have agreed to the side of the bargain. Now it is left to government to ensure that they also fulfill their side of the bargain, so that all of us, including government and myself and you, individual bondholders, whoever want to trade in the bond, investors, will have confidence in the market that now government is making deal with its promises. Coupons are being paid, maturities are being paid, and therefore, because that is the only way government can also fulfill the bargain, make sure that there is sanctity in the market, there is confidence in the market again. And therefore, we have fulfilled, I believe that strongly that we have fulfilled our part of the bargain. If you read our statement also, we also said that we also hope any restructuring of our bonds will also contribute to the recovery of the Ghanaian economy. Thus, we all want the economy to recover. And therefore, since we've done our part of the bargain, we are now counting on government to ensure that they also do their part of the bargain, so that we can have the confidence in the capital markets back again on track, so that we can all trade in it.
You're counting on government to do their part of the bargain. Some would argue that you probably should have seen a few things more from government, but you've made a point. Shouldn't that have been the reason? I mean, you've talked about how the market operates. Shouldn't that be the reason, for instance, that you don't immediately exchange all your bonds with government, and you could have taken time to exchange some, look at how government would treat it, and then you have further discussions?
So if I ask the question, how long is the time that we should keep on waiting? Because we're waiting from December, or better so you can say from February. So how long should be that time? That is the question.
But Mr. Esso, this is other people's money. The suggestion is that as trustees, you should have infinite patience when it comes to making the right decisions with other people's money.
Yes. So infinite patience can lead to the time where you are even on retirement and you cannot get your benefits. And I don't know whether if you are on retirement and you cannot get your benefit, you can have that infinite patience for me as your trustee that you've entrusted your funds for me. That is no. Because per the pensions operations, the moment you have hit your 60, you put in your withdrawal, we must pay you. We should pay you. And I'm not sure you, as a worker who is on retirement, can have that infinite patience. For me, as I'm having the infinite patience also with government. So you could see that I am here protecting your interest, and I'm here to ensure that your interest is highly protected. And therefore, that is why so what is that time for waiting? But if you say infinite, it could be 30 years, it could be 40 years, it could be the time that when even me, a practitioner, when I go on retirement, I cannot access my fund. So how long can I continue waiting? So then, in terms of investment, we could calculate infinity. But in terms of investment, that is why instruments are always time-bound. Every instrument that you found on the market in any investment instrument is always time-bound.
Yeah.
I mean, so there cannot be infinity when it comes to
I think
investment.
maybe you are taking too literal a meaning from my use of the word infinite. But in any case, you've made a decision now. So you've committed to a course of action, which you insist will work because you've been assured. Now, if that assurance falls through, do you think the people whose money you made the decision with will be patient with you?
Well, that is why I have made a statement that the market is always two sides, the buyer and then the seller. So, or the demand and then the supply. It's always two sides. And the two sides have to work together. I believe that our side, we have done what we think is in the best interest as our professional due diligence have imposed upon us. I believe that our side as trustees, we've done the best for our pension fund contributors because we need to protect them, and we believe that this agreement, this alternative offer, rightly and truly protects the worker's contributions to pension fund schemes. That is why I continue to say that we are now also expecting government to also fulfill its side of the bargain. And as I sit here, I don't have any doubts, and I believe that government will definitely fulfill its side of the bargain. And therefore, what I can say right now is to give assurances to pension fund contributors, including you. Don't forget that your interest is also my interest because I'm also contributing.
Okay.
Yeah, don't forget that one. I am also contributing. Everybody working in this industry, in the corporate trustees, we are all contributing. So we are all interested. In fact, I think I am even more interested than you because at the end of the day, if from where I sit and I go in retirement, and then any trustee can tell me that, oh, you were here and you took a bad decision for the industry, so we can't pay you. I think that will fly very big on my field. So I am more even interested than you. You are interested. I am also, but I believe I am more interested than you also. And therefore, I can assure contributors, I can assure workers that we've actually extracted the best deal for them. And when they go on retirement, we are very sure that we can pay their benefits to them.
Let me get your mind on something finally. But for the law indicating you invest in more than 50% in government securities, would you have been comfortable investing in government securities?
Well, that is a very tricky question that you've asked. But let me also say that one of the limitations of our market is the deep nature of the market. You don't have a lot of asset classes that we can all subscribe to, and that has always been the issue. And therefore, when you sit with hindsight, you think that perhaps the corporate trustees should have been more innovative or the fund managers could have been more innovative. But at that time, if you don't have anything to believe that there could be a situation like this before, then government of Ghana bonds become very attractive, especially when the market is limited on other asset classes. So what we are all praying now, or what we are all expecting now, we have a lot more asset classes. I know private equity funds are also making taking up the opportunity to set up asset classes that are bankable for pension funds. And I know some fund managers are also coming out with real estate investment trust funds that are bankable. So I think it is an opportunity that we should have a deep asset classes that can also strongly compete with government bonds. And that is what we are all looking forward to, that we have asset classes that can strongly compete with government bonds. And I think when we get there, the decisions that will be made will always be based on all the factors that considers the competitive nature, the assurances of liquidity, and etc. So, yes, as at now, the market is not that deep. So you realize that we are doing more of the GOG bonds. But when we get a situation where the market is deep, I believe that the experts will always do the maths, the mathematics, and then ensure that they invest in asset classes that will always strongly compete with government bonds. And I think at that stage, government is will sit up because he knows that there are equally good asset classes that are competing with the bonds that it issues.
Well, I want to say a big thank you to Thomas Kwesi Esso, Executive Secretary of the Chamber of Corporate Trustees, for
Thank you very much.
filling
It is
us
my
in.
pleasure.
Indeed.